All right, well, thank you, Jim. It's a pleasure to be here. Let's get a gauge of the audience before we get going here. So how many of you are currently fundraising or are about to be fundraising? Can you raise your hand? Oh, amazing, okay. How many of you are investors or hope to one day become investors? Great, it's a good mix.
I would say an equal number of people.
All right, last question. How many are from the Wilmington area? Whoa, okay. How many from the Triangle area? Not Wilmington or the Triangle. All right, awesome. Well, thank you for allowing us to do this. Like Jim said, my name is Jason Gillikin. 3 months ago, I would have told you that I am the CEO of Earfluence, but that company was acquired. So now I'm the VP of Audience Growth at Walk West. We do podcasting, paid media, PR, all the digital marketing things. We're going to start with a reverse pitch. And so let's actually do some bios. And I had them do their own bios. And let's see, Robbie says, wait, F off, I don't do bios. Oh. Well, all right. Well, Robbie Hardy, if you don't know her, she is founder and partner at XL Ventures. She's also an author. She's a consultant and serial entrepreneur. Give it up for Robbie Hardy. Jen Sumi, to Robbie's left, is a entrepreneur as well. She is a partner at Primordial Ventures. Podcast host. She has a great podcast called In the Soup, and she's also the founder of Lila, Ladies Investing Local Angels. Give it up for Jen Sumi. And then Juan Carlos Pacheco is a senior associate at Idea Fund Partners. He is located in Wilmington, also an entrepreneur and an attorney. Give it up for Juan Carlos Pacheco. All right, so let's get going on the reverse pitch here. So let's go all the way down and start with Juan Carlos with Idea Fund Partners. Juan Carlos, you have the floor.
Good morning, everyone. Another shout out to Jim as well, and the Network for Entrepreneurs in Wilmington for putting on a great event. Again, my name is Juan Carlos, Senior Associate with Idea Fund Partners. Idea Fund Partners is one of the oldest early stage venture capital funds in the Southeast. We've been around for about 20 years now. Currently on our fourth fund. First three funds, we were primarily B2B SaaS with no geographic focus. So we have investments from Israel to California, New York, Canada, here in North Carolina, kind of all over the place. In Fund 4, we're currently raising shooting for a $50 million fund. We're about a little over halfway there, and we've changed up our focus and our thesis a little bit. We've opened up our technological focus to be general tech, meaning that we will invest in anything tech or tech-enabled as long as it doesn't need FDA approval. So as long as you're not putting chips in your brain and have to go through a large capital-intensive process through the FDA, we would love to consider you. Because we opened up our technological focus, and for a few other reasons as well, we decided to zoom in on our geographic focus. And for a few reasons. And starting with what the geography is, it's an area between Atlanta and Baltimore, and we ran some pretty interesting data for doing this. We looked at the number of early stage technology active venture capital firms in the past 5 years, and we define active by any firm making at least two investments per year. And we compared that to the number of unicorns. This is a company that has scaled to over $1 billion. And we found that for every venture capital firm, early stage technology that is active in this area, there's 4 unicorns throughout this region. And when we looked at the more traditional areas of venture capital fundraising, Silicon Valley, New York, Boston, what we found was it was 1-to-1. There's a lot more unicorns, but there's a lot more competition as well on the investor side. So that was one reason we decided to limit or near in our focus on this area, but also post-COVID, a lot of things happened. Most importantly, a lot of talent migration. Great quality of life, great cost of living, which means a lot of people are moving to this area who turn out to be great founders, great executive leaderships and startups. They come from the areas as well that typically have a great startup ecosystem. So they're bringing a lot of that ecosystem institutional knowledge to the area. So blending together these two things, we're very bullish on North Carolina, on the Southeast region, Mid-Atlantic, however you kind of want to define that. And our sweet spot in investment is Series C. We typically write first checks of about $250,000 to $500,000. I'm pushing, and we're starting to make a little bit more investments in the pre-seed stage. The check size is a little bit smaller as well. And then we typically go into Series A as well. And the way we're building our portfolio in Fund 4, we've already made 12 investments. We're shooting for about 20, maybe 30 investments total in this fund with those initial small checks. About 10 of those companies will get a follow-on check of about $1 million. That's typically based off of performance. And then about 3 of those 10 will get a secondary follow-on check of about $1.5 to $2 million. And why we're doing this, we're really shooting for companies that can be unicorns, that one company can return the entire fund. So that means, not just a great company that can scale and sell for $40 million, $50, $100 million, but a company that can scale from our initial investment when they might be worth, a post-money valuation of $10 million, and we can get a multiple when they exit for over $1 billion and return our fund. Our fund is made up of about 5 investment professionals. We have a senior associate, myself, an associate who deals with a lot of our outbound deal flow, so finding companies before they're even raising capital, so that we can develop a relationship with them and be ready to invest when they do need investment. Our partners as well, and CFO, and then Zakia, who's our principal. And trying to think of anything else. I'm very bullish on the Wilmington ecosystem. I'm living here now. It's a very exciting time, and look forward to continuing to develop relationships here with the startup founders, with the ecosystem partners, and hopefully be able to co-invest with some of the people up here on this panel.
All right, thank you. All right, Jen Sumi with Primordial Ventures.
We don't have to use the slides if you don't want to. It's fine. I'll just talk. So hey everyone, my name is Jen Sumi, partner of Primordial Ventures. We are an early stage venture capital fund based in Durham, North Carolina. And sorry, I thought they were using slides. And we invest in the most promising early stage tech startups based in North Carolina. So we focus primarily on the pre-seed and seed stage in our investments, and we are one of those very active funds that Juan Carlos just mentioned. We typically write 12 to 20 checks a year. We have a very unique strategy. Oh, okay. It's fine. It's fine. You can just keep the logo, that'd be great. Good branding right here. You can take some pictures. No, so we're focusing on, what did I just say, pre-seed and seed. We have a unique strategy. So what we like to do is get in very early, like Juan Carlos said, very bullish on the pre-seed stage. We know that we can make the most impact when companies are going through that rough stage from 0 to their first $1 million in revenue. So we'll get involved with a very small, usually 25 or 50K angel-sized check for our initial check. And then we layer on a ton of support for those companies. So we meet with them every month. We're there through all the bumps and hurdles. We create a good community with the other founders in our portfolio. We have regular events in our office. We even have the whole first floor of our office in downtown Durham as open co-working. Not all of our investments are based in the Triangle. We have an increasing number from Charlotte. We do have one Wilmington company as well. And Winston area, we have a couple from there. So whenever they're in town, they can use our office as a base of operations, and we get together on a regular basis and connect them with other sources of capital, like Idea Fund Partners and Excel, and some of the other local early stage investors. We come together once a quarter and highlight the new investments that we've made and try to showcase them to the rest of the North Carolina ecosystem and community. We also have just some general administrative support. So we have HR and recruiting support for our portfolio companies as well. Hiring of your first employees is really, really important, and you have to to make sure that you get that right. And it takes a long time. I mean, you're busy wearing 16 different hats at the earliest stages. We know that support in that area can save you a ton of time and effort. And so we have a woman on our team named Melissa, who's been doing hiring and recruiting for longer than she'd like me to tell you. And she can help with vetting all of the thousands of interviews and early resumes that you get, and just narrow it down to the ones that are going to be perfect fits for your company and let you guys make the final decision. As far as focus, we are very much generalists, so we, similar to Idea Fund, invest in all things tech. Nothing biotech or life science or anything requiring FDA approval, no brain chips. But otherwise, all business models, all verticals, selling to all different types of customers. Generally, we have folks that are building software solutions. That's kind of our bread and butter, but we do look at things that include a hardware element, typically if it's hardware to gather data for the software solution. We are also a small but mighty team. There's two partners, myself and Joe Colopy of Bronto fame, if you've heard of that dinosaur-related company. We also have an associate who joined us earlier this year, and the aforementioned HR help, and we also have some finance and business operations, Marissa, on our team. So, trying to think if there's anything else. Oh, just the base stats. To those early active numbers, we started about 2 years ago with Primordial, so we're a pretty new fund. But since then, we have made 26 checks into 19 different companies, and more every month. We've got another one coming down the line in June, so we're just going to increase those numbers and increase our community and impact in this area. We also like to follow our companies, similar to what Juan Carlos said. So about a quarter of the companies that we write those early checks in, we like to write a larger check later on, somewhere above 100K. And right now, since we're only 2 years old, we're starting to investigate how long we're going to continue to follow them and see if we can make sure to support the ones that continue to do well. I'm pretty accessible, so my LinkedIn was on there. I don't know if you want to flip to that. I don't know where he went. Okay. But you can just walk up to me, reach out. I've got business cards. Shoot me an email. I'd love to get connected with all of you. Happy to help out. Happy to lend a hand.
Thanks, Jen. All right, Robbie Hardy with Excel Ventures.
Hi. So Excel Ventures is completely different. We don't do equity. We do debt. We do loans. The other piece is where it's all women investors investing in women founders. And the reason for why we do it the way we do is I've been an angel investor for 30 years. It's embarrassing but true.
Robbie, can you hold the microphone closer, please?
Hello. Sorry. Got it. No, usually people don't ask me to speak louder. So as I thought about, I had been investing, for all these years, the only woman in the room often, with a lot of, white men over 50. No offense to those of you in the room. And so I thought it was time to do something else. And in 2000, I tried to do a women investing fund, and it didn't work. And so I opened it up, and the fund did great, et cetera. So finally, in 2019, I decided it was time. And between 2000 and 2019, which of course was a long time, I talked to lots of people about why are there not more women investors. I harassed my male colleagues about why we don't invest in more women founders. And finally, I looked in the mirror and thought, it's not their problem, it's our problem. And so women have to solve this. And it's time to sort of step up. So I did a bunch of research around here, talked to a lot of financial advisors, and learned that people didn't even know what an angel investor was. They didn't know what an angel was, which, for those of you that don't know, it's from Broadway. It was the angel on your shoulder, people who backed shows and stuff on Broadway, and that's what they were called, because they were angel to sort of give them the money to, and I think they did, well, I'm sure it was investment. But anyway, so that's where it came from. So we fast forward, and I invited 25 women who I knew and said, what do you think about doing a women investing in women fund, and let's get together and talk about it. 15 of them showed, 14 stayed with me for 9 months while we sort of like having a baby, while we figured out what's the right model. And one of the things that I learned is that women are different, which we already know that, but they really like to know what they're doing before they jump in. They don't want to jump in the pool and hope there'll be water in it by the time they get there. And so the education and understanding what they are doing, and investing is intimidating. And it shouldn't be, but it is. It's just like anything else, you have to learn the language and you have to learn the jargon. And so I'm sure you know this well since you're new to it. And so I remember it all very well. We decided that one of the things that we knew, it's hard for women to get, it's hard for everybody to sort of get the first 50,000 or those small amounts of money that might make a difference in your margin. If you could buy, 1 million boxes for $50,000 versus 100,000 boxes for $50,000, that would make a big difference in your margins. It's a sort of it's a dated example, but it's kind of, how it got started. So we decided that we would do loans, and we would do loans at $25,000 to $100,000, no collateral, prime plus whatever, which has of course been interesting the last couple of years. And we would, the founders, we would invest in only women founders, and they would obviously have to have some revenue. So we're a little past you, but kind of not too far. And they need this money to take them to the next level. Sometimes we tranche it, sometimes we do it all at once. So it's a real sort of mix. And the other piece that was different, and a lot of people think this model is terrible, so I already know, but we think it's good. And we opened it up so that the buy-in was $10,000. Not most angel funds, it's 50,000, 2 units of 25. We do 2 units of 5,000. You can do as many units as you want, as long as you're not a majority of the fund. And so it lets women put their toe in the water to get educated while doing it. And now we have Lila doing education along, so this combination, Jen and I have never talked about this, but I was talking about Lila yesterday at an Excel. Excel is raising its second fund right now, so we were talking about education and all those kinds of things. So we don't have a particular focus. We invest in all kinds of things. I mean, you see a lot, everyone worried that it was going to be all beauty products or spas or whatever. It's not that. We have a woman who has, a bra after breast surgery, which is very difficult to deal with. None of us you only understand it when you go through it. We have a food company. We had we started out as a network. We had a company that had a special way to embalm dogs, etc. So, it's been a wild ride. It's been all kinds of things. It's been very interesting, and we also help the founders and get them to be, better founders, we hope, and not by telling them what to do, but sort of guiding them and saying, what about this, and making introductions, etc. So we are coming to the end of Fund 1, and we're in the process of starting Fund 2. Thank you.
Thank you, Robbie. So when Jim asked us to do this panel, he said that Wilmington entrepreneurs are getting a little bit frustrated that capital is not coming to them. And so wanted to talk a little bit about that. And so let's start with Jen. Jen, that premise, do you agree, disagree? Can you comment on that?
Just that we're not coming to the beach physically, or investing in.
You've been coming to our events for a year,
Mm-hmm.
and Juan is living here, and Robbie has known the Wilmington ecosystem. So maybe first explain the investment in Sportgate, and
Mm-hmm.
that would kind of address one of those issues. But,
Sure.
I mean, you're part of College Ventures, so you've
Yes.
seen the articles that have come out about the companies, and none of those have found investors yet. So
Yep.
that's what I'm trying to get to.
Well, I think I somewhat agree with the premise, but not entirely, because I think there are really great companies here. We've had historically some wonderful companies here, and I think it takes time for those ecosystem levers to start turning. I know for certain that there are graduates, I'll call them graduates, but operators who worked inside Untapped or Encino who are now starting their own companies. And those are companies that are actively in our deal flow pipeline. They're ones that we are looking at and we're following. We're deciding which ones that we want to make investments in. So I did mention that we do have one Wilmington company in our portfolio. So there was a company called Heads Together Health, who I met. They were a Durham-based company, and they merged with a company called Sportgate, which is based here in Wilmington. And I was like, oh, this is a perfect match. They actually, very sort of funny, met at a conference, didn't even realize that they were from the same state because it was a conference in another state. And realized that their companies were so synergistic that they should talk about merging. And so that happened at the end of last year. And now I'm really excited because they have a team in Durham. They've got their CTO here. They've got some other folks located around the country. But the important piece is that it does make me feel a little bit more connected to the Wilmington ecosystem. But we definitely are looking at companies actively out here. We've had some in our pipeline that we've been really, really excited about. Yeah, I don't know what else to say. Yeah.
Well, Juan Carlos, so you live in Wilmington. Is capital coming to Wilmington entrepreneurs? Is it not? What do you think?
I don't want to upset people in the room by my answer, so I'm going to navigate. No, I agree with Jen, and don't completely agree with the premise. I think there's some truth there. But the Wilmington ecosystem is developing. I like to say Wilmington is either overhyped or it's underhyped. It's not really, given what it's due that it's worth. It's a developing ecosystem. There's a lot of people moving here that have previous startup experience. There's a lot of great companies here. We haven't made an investment yet, but we have one company specifically that's deep in our pipeline that I'm really pushing for and hoping that we make the investment. And there's a lot of great things to love about Wilmington. I think as new capital comes in, I also think the level of maturity and the level of progress that the companies are going to need to achieve here in order to qualify essentially for an investment is also going to raise, because when new capital comes in, the competition between startups also starts to increase. So I think also too on the angel side, I think a lot of investors here are high net worth individuals. Traditionally, their investments have gone into a bit safer investments such as real estate, maybe a little bit of on the pharma side, but they're not used to being angel investors. The only exposure they might have to venture capital or startups is watching Shark Tank. And investing in startups is very different than what you see on Shark Tank. And so there's a level of education that needs to happen from the angel side and getting more exposure and used to what it looks like to actually invest in startups. And I think too, the angel side is so important for us as institutional investors, because on one level, it decreases the risk because there's already been capital. We've been able to see, what the founders have done with the capital that they have already gotten. So when they get a bigger check from us, we know either A, it's going to be used well, or B, it might not be the best investment because they haven't used their capital, to the best of their abilities. And again, it's just a developing ecosystem. I've been here since October. I also myself am having to learn about the ecosystem itself. And so I think it takes some patience, it takes some grind, but it also puts pressure on the entrepreneurs and the startups themselves to raise that bar just a little bit as well. Because at the end of the day, we have to raise our investment capital as well, just as much as you do, and we have to earn our capital that we invest from our own investors, just like the startups do as well. So there's competition. The fundraising environment has been hard for startups. It's also been hard for venture capital funds. So it's a little bit both. It's coming. We've seen one investment already on the stage here. Hopefully, we'll be able to add to that. But it's coming, and I think it just takes time for the ecosystem to develop.
Right, and Robbie, you've mentioned that you've been investing for 30 years. What have you heard over the years about the Wilmington entrepreneurs and Wilmington investors, and what's fair, what's not?
Well, I will start off by saying Wilmington is not the only place that thinks there's not enough investors. I mean, it's just the nature of the beast. Tom Rue and I were at Kauffman Foundation, where we kind of saw the country of, who needed what, when. And, particularly if you're trying to raise money, and you can't, or you're having difficulty, you think there's not enough money. And so whether there is or not is hard to judge. So one of the pieces, my shout out to high net worth people in Wilmington, is invest in venture funds or angel networks, because then you have a hand in what goes on. So I think it's, it's incumbent on Wilmington, people who live here in the area to sort of, and as Juan says, it is, people aren't used to it because they're used to investing in the stock market, which of course now is a little bit volatile. So it might be a good time to, just a little bit. It might be a good time to sort of mix it up. So, I think I think we forget to make that statement, and I think that's an important one. I mean, I think, I've been coming down here for a very long time, and, there's a lot of great companies here, and there's, and there's need for more, Jim's done a great job, but we need more infrastructure to help these entrepreneurs. So, I think everybody's trying to do that, and I think you just need more and more of that. It's not that there aren't great ideas and aren't great companies, and it does take time for these ecosystems to evolve. So, I've stood on the street with a cup myself raising money for startups, so I know what that's like. And as everybody said here, we have to raise money too, so we understand in a different light, but it's kind of the same thing. You're standing with a different colored cup, but you still have a cup, and so you have to sort of satisfy that also.
So what can entrepreneurs do then to get in front of investors and just make it super attractive so it's much, much harder to say no to the investors? Jen, let's start with you on that one.
I already mentioned that I'm very accessible. Just keep reaching out.
That's not sounding good.
Well, you just you have to reach out. And for me, it's always a good sign if a founder follows up. Because admittedly, while I am very accessible, my inbox is trash. I try really hard to stay on top of it. I'm worse with responding to LinkedIn messages. It might be a month until I get to it, but I try really hard to respond to everyone, and apologies if I haven't yet to anybody that has reached out. But just keep up that persistence, because one of the things that I love is that if you reach out, maybe you reach out and a couple of weeks later, hey, just want to bump this to the top of your inbox, love to chat sometime, whatever, add some context. For me, that's like, oh, this person's probably a good salesperson too, because I know that they're following up with the people that they want to get in front of. So just be persistent, stay in front of us, and then come to events like this. I love meeting people in person. It's nice rather than seeing their head on like a little Zoom screen, to actually see them and engage with them and interact with them in a more casual environment. And I think to Juan Carlos' point about the Shark Tank, like it's not, you get 10 minutes to pitch and then you're done. It's a very casual conversation. We're all humans, we're all people too. So just come up and start building a relationship. And my advice would be do it way before you even think about needing funding. Reach out with an ask for advice, or hey, what do you think about this idea? Poke holes in it. What are the biggest risks you see? Those sorts of conversations, again, I think are incredibly valuable for both parties.
Jen, can you talk to Grepapalooza events?
Oh, yeah.
Tell the audience about that.
We do have another event coming up. So in our office, we have a media organization called Grepbeat, who has a newsletter covering Wilmington now on Wednesdays. And Grepapalooza is a one-day conference, one day specifically, so it's easy to come in and come out, sort of like what you're doing here, Jim. It's on June 5th this year, which is a Thursday a couple of weeks from now. There are discounts, codes galore. If you're a founder and you want to come, reach out to Caesar at grepbeat.com, and he will give you whatever discount you want. We want to encourage as many founders to come as possible. We're putting up some great programming. We're going to have a pod off. Where's Skillmaker? Where's Rob? Robin.
He's stepped out.
All right, well, he'll be on a podcast with me. We're going to do a live podcast recording. We'll have some other Wilmington folks there too, so carpool, whatever you want to do. But definitely come out and join us. It'll be a full day of fun programming, and there's also a $5,000 pitch contest, which will be super fun. We've closed, we already announced who's going to be pitching, but those events are really great to go to as well, because if you watch other people pitch, you can kind of hone your own and get some tips and tricks listening to other founders. Good? Good plug. All right.
Caesar didn't give me shit for a discount. I don't know what you're talking about.
Founders.
Oh, okay. All right.
Well, you're an ex-founder.
Ex-founder, okay. Yeah, all right. Juan Carlos, what about from a storytelling perspective? Like, how can entrepreneurs get their story out there more to make sure that they're just seen everywhere, and there's more demand for what they're doing, both from a customer side, but then also from an investor side.
Yeah, I think as a founder, your story is single-handedly probably one of the most important things that you can learn to knock down. And actually, before I go on there, I hold office hours for Wilmington-based startups every Tuesday and Friday morning. So if you reach out, I'm literally have time to meet with you in 30-minute blocks. Happy to chat all the time. And so please reach out. But in terms of story, I think there's two stories that a founder needs to learn to tell. One is their general story, or you can think about it as the story that you were going to tell your friend if they had, or your parents, your spouse, your colleagues. What are you working on? What is the problem you're solving? Why is it such a big issue? And what is your solution? Who are you as a company? The second story I think is crucial for founders is your fundraising story. How are you approaching an angel investor to get them to buy into your story? Your first believers in your company. Then, as you go and you start to raise additional capital from Primordial, from Excel, from Idea Fund, what story are you pitching to an investor that is looking to help you scale, looking to help you break into another company? But also, too, thinking about, okay, I know I'm getting 18, 24 months of runway in this round, and so I need to begin preparing for my next story. I'm going to use this capital to do this in the next 18 to 24 months. These are the things I'm going to de-risk so that when I go to the next set of investors or come ask for a follow-on investment, I have a story again. All right, I've raised this the past 18 to 24 months from an angel. This is what I did. This is how I de-risked it. And now for the next 18 to 24 months, maybe 36 months, I'm raising your capital so that I can do this, get to this next step in my story, de-risk this so that we can be ready for the next round of investment as well. Investors were always looking to de-risk, and that comes from different fundraising stages. So if you can learn, again, one, to tell your story from a general point of view, so if you're selling your product, if you're selling your service into a customer, how do you present that story? And then the other is the fundraising story. Because as investors, we're looking for very specific things and really a journey. So how are you going to invite us along on the journey to where we can be helpful, we can know that our capital is going to be used to good work, and that when it comes for you to raise again, that story just starts to build on itself.
That's great. And getting your story out there, that could be on social media also. That could be on podcasts. That could be on blog posts. So it doesn't have to be just telling your story to the investor or just in a pitch. You've got to tell your story all over the place so you can build demand for what it is that you want to do. Robbie, you've seen a lot of pitches over the years. Can you share an example of something that worked super well or something that didn't work really well?
Yeah, I mean, I have seen a lot of pitches, obviously, over all these years. But what works really well, first of all, beautiful slides are the last thing you need. They're lovely if you're doing a big pitch competition and the whole world is looking at them. But when you're pitching to anybody, don't spend time on how they look, making them pretty. Spend time on what they say. And spend time on not reading your slides. And spend time, so instead of having full words, have pictures or graphs or charts or whatever. So those are the ones that, so I can hear you, and I can also see what else you're saying by what's on your slide. When you read your slides, I can read them too, so please don't bother, so that kind of thing. Telling your story, the one I want you to tell your story to really is your potential customer. So I will talk, so people that have been out there talking about or trying to get feedback, whether it's focus groups or calling people up cold or getting introductions to who you think your customer is, getting traction with those people before you come here to, so that you can say, because otherwise we'll say, well, how do you know anybody wants it? Well, because they really need it and it's my baby, all that kind of stuff. It's because I've already talked to these many, or I've already signed up these many, or I've already done that. So while talking and getting your name out here to attract investors is important, what's really important that will attract investors is your traction, no matter how big or small that it is, that you've spent your time there. The other piece is, don't quit your day job. I say this to every founder I coach, until you know what it is you're going to do and how you're going to fund it. Because we talk a lot about raising money as it's the only way to start up a business, and I think we have proof here that that's not the case. And there's a lot of it. There's bootstrapping, and there's a lot of things you can't bootstrap, but it's like, how can you be agile? And in my opinion, the less money you have, the smarter you are about making your business grow. And I think we can probably all attest to that. It's not that, throwing money at something, unfortunately, is usually not the answer. And when you have too much money, that's often the case, because particularly if you come from the corporate world like I do, we always threw money at it. So, we didn't have to think about how we were going to make something happen. So it's those kinds of things that resonate. And so I think for me, the best pitches I've heard is when people actually tell their story. They don't tell what they think I want to hear, or what Jen wants to hear, or what Juan Carlos wants to hear. They tell their story, and it helps. So I can get into your vision, and I feel like I can be part of you. So those are the kind of things that I think are really important.
Great.
Robbie, you would agree, it's not enough to tell your story, but why the pain point of what you're solving is part of your story.
Well, if that's not part of your story, you don't have a story.
Right.
All right, I want to open it up to questions from the audience. I can keep asking questions if we don't have any, but let's open up to questions from the audience here in the 910 hat.
Yeah, you mentioned sort of Shark Tank, and one of the things that they talk about is, that's it's not enough equity, or it's not enough interest to get me to work with you. What is it that you all can you share with everybody? I know Jen talked about some of the HR support and whatnot. Can you talk about, once you make an investment, what services you all provide to investment?
Yeah, Juan Carlos, you want to start with that?
So I think that's a very, very good question. I'll preface it, when we give entrepreneurs capital, we want the entrepreneur to be able to run their company without us. We want to be able to give them the capital, and if they need us, great, but ideally the entrepreneur can be successful with their team to where we don't have to intervene as much as possible. That being said, we invest, particularly when it's on the earlier stages, we like to get involved as a board member. And because we've been around for about 20 years, we've co-invested with about over 150 different funds. So we also start thinking about that next stage of fundraising. What KPIs do you need to hit to be ready to fundraise, so that we might not have to come in with a bridge round to extend the runway a little bit more. But we can start introducing you to investors. We have operating partners that are typically LPs or investors in our fund that have expertise in a given industry. So if you're a fintech founder in our portfolio, we have a fintech operating partner that can help introduce you to customers, that can be an advisor for you. We also have kind of a Rolodex of executives that can come in and join your team if you need them to join their team. And then just overall support. Throughout, we have founders that will meet with us monthly if they need it, just if they're working through a tough problem that they're trying to solve, if they're needing some advice on how to deal with equity allocation to new hires coming on. Basically anything they need. We're willing to get in, help get our hands dirty. But again, at the same time, we want those entrepreneurs to be able to be successful on their own, grow and scale their company pretty much without us. Because we don't want to babysit founders either.
They don't want to be babysat.
Right, exactly. And so yeah, it depends on the founder, depends on the company. It depends really as well if we're a lead investor. So if we're really taking a role and a bet on the company, then we want, which typically means we put a bigger check in as well. We want to make sure that check and that investment capital and that team is surrounded with all the support they need.
Jen, what about you? Is there a certain percentage where you're like, this just isn't worth our time? Like, is that how?
Oh.
No, I don't know.
50% ownership after they invest.
Right.
Oh,
yeah.
I see. No, still no, I guess. We run kind of those calculations before we decide if we want to make an investment. But for us, I think our biggest goal is really to help with that 0 to first 1 million. So I know Idea Fund is investing in a little bit of a later stage. We don't want to babysit either, but one of the things that we knew that we wanted to do from the onset was meet with our founders regularly. So we meet with every founder we invest in for at least a month after, or every month for at least a year after we make an investment. And every time we renew an investment, we continue those monthly cadence. We did that because we know things can get off course really quickly, and that road from 0 to 1 million is really bumpy. And so we're just there to help founders zoom out. And it's 45 minutes a month. It's not too much of my time, and it's not too much, hopefully, of the founder's time. But you get a chance to zoom out and look at the overall health of the business, see if you're tracking strategically towards the goals that you're setting for yourself, because we cover that in our first meeting. We don't set goals for you, and we're not dictating things for you to do, dictating milestones you need to hit. We're just helping you track towards your own goals. It's like an accountability partner, basically. And I thought it would be a little bit of like an ask for founders, but what we found over these last 19 companies that we've invested in is that's their favorite part. You're working with small teams and you've got all these different ideas in your head, and it's really nice to have somebody who's really vested, you would say, in your business, to bounce those ideas off of and to just play kind of like this strategic whiteboarding partner with you. And then also, some of the times we get in really tactical with some of our founders. So if you're going through a phase where it's like, okay, I want to land these key accounts, I want to find the right people at these key accounts, I'm pulling up my LinkedIn and seeing who I know at those companies and see if I can make a warm introduction. So it can be anything really that a founder wants or needs at any point during their journey to that first 1 million.
All right. Other questions? Yes, sir.
Yeah, Robbie, you said that there needs to be more infrastructure for entrepreneurs here to bring the investors, but it
Well,
seems...
no, to help the founders, yeah, I think in general.
Right.
Yeah.
But it seems to me that the places that do get a lot of the investors kind of have native built-in support. Like the Triangle has those great universities, Boston has MIT, the Bay has UCLA. These.
But I think those are false. I mean, we never saw universities, if you think back to the Triangle, yes, the universities, but everybody left. There had to be the entrepreneurial infrastructure in order for them to stay. We were losing more students with innovation and scientists or whatever than we were keeping in the early days of my time here in the entrepreneurial world. Just so you know that.
Sure, but the tech, the research, and the growth from that still stays in those general areas. So my question is, we need more infrastructure here, but we don't have an MIT here necessarily. Are we trying, not that UNCW is not a great school.
Austin does, yeah, a lot of places
They're
don't.
starting up a great
Right.
engineering program, but, trying to get infrastructure here, are we putting the cart before the horse? Or what infrastructure needs to be here for entrepreneurs to get that investment here besides?
Well, I think first of all, part of the infrastructure is to have more LPs in funds and have more funds here that are from here. So I don't think the you have a university here, so there are things that you have a whole marine science world here that we don't have other places. There are things here at the beach that you have that other places don't have. So it's not, so I never want to say, well, we don't have this, so we can't do that. So it's what do we have here and how do we leverage it? And I think that's what Jim, yes, sir.
Okay, so a piece of infrastructure is, there's a gentleman here named Richard Stroop, who is an investor and actually our largest sponsor, who has just announced a 2-day boot camp in June. And it is the type of infrastructure that we desperately need. There's no general way to say this. UNCW CIE has had programming for female entrepreneurs. There's now programming for blue economy, water tech kind of entrepreneurs. But and I'll let her decide if she's going to announce what she's doing next. But again, this is very risky to say, but I have to say it. If 80% or more of capital goes to white tech bros, then why aren't there white tech bro programming? Like Techstars, like an accelerator. Because when you try to put those on, you guys don't sign up. So that's a problem, is we need this kind of 2-month boot camp where it's once a week or every other week, where you guys, it's a program that fills in your knowledge gaps. You're gonna know 75% of what's taught over the 2 months, but you're missing that 25% that you don't know, that you're not willing to say that you don't know. And so that's the kind of infrastructure that we desperately need, and now Richard Stroop has agreed to provide it. And if you're interested, he's got a wait list for the next one. He's already sold out, we promoted the hell out of it, so he's got his 8 companies that are signing up. And it's not just for white tech bros, it's for anyone that has a company below $1 million. But that's the kind of infrastructure that I've been trying to do for 10 years, but I have not been able to gather the resources to make it happen. And that's a problem. And now we have a solution for it.
And I think you'll have more. And so, yeah, Heather.
I just want to insert real quick, since you mentioned CIE. We're trying to move in that direction, and thanks to NCIDEA, this fall we have a pre-accelerator program for health tech and biotech ideas. So if you have that sort of idea, talk to Lydia Thomas, our amazing program manager, and we'll make sure that you get you in that program and you have a chance to win cash.
All right. Okay. Jim said that he would be very involved in the panels, with very involved in capital letters. All right, we've got a question up there.
Given the macro environment, what would the ideal investor persona be for LPs? Who would you guys target for your funds to be
Accredited,
accredited?
you have to be an accredited investor.
Sure, as a
What does
base
that
level.
mean? Let's define that.
So it's a net worth of $1 million or something, help correctly, 200,000. Yeah, 200,000. Yeah. So it's, and that's, I think there's a lot of that here. I mean, obviously, and I sort of cutting into it. Sure,
Use the microphone.
So you want an investor. I mean, some LPs are involved, some are not. I mean, one of the most valuable things that LPs can do is make connections for the companies that are in their portfolio of the fund they're in, or make introductions for various things. So, you know, these guys can speak more. You know, ours is a member managed LLC, so we're a little bit different. But I understand the LP side because I've been one. But so it can be, and then if you have a certain expertise. But at the end of the day, I mean, it's, you know, your ability to write the check and your ability to also, you know, make introductions. But I think you guys should shake.
Just to add on to the question, in terms of the profiles, given the risk of venture capital relative to other investment classes, what are you guys seeing out in the market for willingness to become an LP, to invest $1 million or more in funds when a lot of people are moving to cash due to uncertainty? Like
They're losing cash in the stock market.
Well, Juan Carlos, looks like you want to answer that. Like, I guess what are the expectations for return, and you know how patient you need to be if you're an LP?
Yeah, you're not going to get guaranteed returns every year like a real estate investor. Put your money away, invest your money, and the return 10 years. And so that's a high risk, but there's also a high reward as well. If you're investing in real estate, you might get your 10, 15% return every year, guaranteed. You know that cash is coming in. That's not the case for venture capital investments. I think at the basic, someone who can write a big check. Like that's the ideal customer profile for us. If you can write a big check and you can wait 10 years to get your return, perfect. Also, too, you know, you have some that can be more involved. We have a lot of people that are moving here from California, from New York, that have startup experience, that have tech experience. So on one hand, they can invest in our fund, but also be angel investors on the side, so that they're investing in a company, working with that company for 6 months, and then they can come to us and say, hey, I've been working with this company for 6 months. The founders are awesome. They're struggling with this. I think you guys would be an ideal next investor for them because you have this, and this value prop that you can give to them. Also, too, investors that can introduce you to other investors, so that you can, get more checks in, that you can invest. Locals that are involved in the ecosystem, that believe in the ecosystem. So ideally, people who are exiting from companies Untapped, Encino, they keep their money here. They don't exit and go off, to the Cayman Islands and never come back to Wilmington again. But they see that, Wilmington was part of their success. So they want to give back in some sense to their own success to see the ecosystem grow. I think that's where the infrastructure comes in as well. Infrastructure starts at the basic level from angel investors that are that initial first check that help the company scale a little bit so that they can build traction enough to come to the investors and say, hey, I have this traction. Again, your story. I need your capital now to de-risk it in this way to hit these goals so that I can continue scaling for the next 36 months. But again, back to it, like the ideal is big check writers.
So if more locals invest in their funds, they will make more local investments because you would have more suggestion power. If you randomly reach out and say, hey, you should invest in that startup, their first question is, well, did you write a check? Are you an angel in that company? That's what we face. There are 3 local angel investor networks that are here, and we've made 19 investments as well. Venture South is here, and the Wilmington Investor Network has always been here. And they've been here for 25 years. So we need more angel investors to get those companies far enough along that these guys will consider an investment in them. We have to have Wilmington investors investing in Wilmington startups, so when Wilmington startups travel to other cities, guess what the first question is? Well, who invested in Wilmington in your company? If the answer is nobody, that's a red flag. Guess what the second question is? Well, why don't you move your company to where our fund is? How do you like that feeling? You don't. You wouldn't want that. You wouldn't want a very promising company from Wilmington to relocate because someone here wasn't organized enough to make an investment. And that's what I battle every day. I know funds are coming after our startups and saying, hey, we know you like the beach, but if you want $1 million, you got to move to Atlanta. I know that's happening. You got to move to Nashville. That's a lot for me to fight. So those are the investments, infrastructure that we're talking about. We got to move on to the next. Okay, so we'll take a break. Not taking a break. We're going to thank our panelists here.
Yeah.